The system that made Gulf region rich is starting to break down, and it's happening right now. If you look at the Gulf today, it feels unstoppable. Cities rising out of the desert, massive infrastructure projects, global tourism hubs. Places like United Arab Emirates, Saudi Arabia, and Qatar didn't just get rich, they engineered it. But here's what most people miss. This wealth wasn't built on oil alone, it was built on a system that connected oil, money, and power. And for decades, it worked almost perfectly. To understand the system, you have to go back to the 1970s. The world had just gone through an oil crisis.
Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
And the United States needed a way to protect its currency, so it made a deal with Saudi Arabia. Oil would be sold only in US dollars, and in return, the US would provide military protection. That created a powerful loop. If you wanted oil, you needed dollars. And if you were selling oil, you ended up investing those dollars back into the US. This became the petrodollar system. And it didn't just stabilize the dollar, it turned the Gulf into one of the richest regions in the world. For decades, this system held everything together. But now, you can start to see the cracks. The first crack is instability. Tensions involving Iran, Israel, and the United States are putting the entire region under pressure. Look at this chart to understand it better. The GCC prediction is plummeted. This is just the beginning, because right through this region runs one of the most important routes in the world, the Strait of Hormuz. Nearly 20% of global oil supply passes through it. If that flow is disrupted, oil prices spike, markets react, and the entire system feels it. The second crack is trust. For decades, Gulf countries relied on the US as a security guarantee. Look at this chart. This is what happens to tourism if this war doesn't end quickly. If there's no conflict, tourism in the Middle East was actually expected to grow by around 13% overall, and even higher in some regions. But now, change the scenario just slightly. If the conflict lasts just a few weeks, tourism doesn't grow anymore. It drops by around 11 to 12%. And if this war drags on 2 months or more, now you're not looking at a slowdown, you're looking at a collapse. Tourism across the region could fall by 26 to 34%. And that's not just numbers.
Talking about Dubai here, in fact, the growth story of Dubai is facing a visible showdown as the impact of the ongoing Israel-Iran war begins to ripple across key sectors, from real estate to even tourism. Now, the hospitality industry is already under pressure. Most hotels across Dubai are reporting occupancy levels dropping below 50%, which is a sharp fall for one of the world's busiest travel hubs. Now, the slowdown is also spilling over into the property markets, with reduced investor interest and also softening prices. Experts say that prolonged regional tensions could deepen the slump, hitting Dubai's tourism-driven economy even harder in the weeks to come.
This is how much the war affects the GCC. But now, there's growing uncertainty. Will the US stay fully committed? Or will it eventually step back? Because history shows the US doesn't always stay forever. And then there's the third crack. The system itself is changing. Countries are starting to trade oil outside the US dollar. China, the world's largest oil importer, is pushing for deals in its own currency, called as petro-yuan. In 2018, China launched something called the Shanghai Oil Futures Contract. For the first time, oil could be traded in yuan, not dollars. At first, the world didn't pay much attention. It looked small, limited, almost symbolic. But then things started to happen. Russia, after facing Western sanctions, began selling oil to China in yuan. Then Iran, cut off from the dollar system, started doing the same. And quietly, even Saudi Arabia, America's closest partner in the Gulf, began discussing oil trade in yuan.
Iran war in its fourth week is looking like a perfect storm for the petrodollar regime. Well, that is according to an analysis by Deutsche Bank Research Institute. Even before the West Asia crisis, the petrodollar regime's fundamentals were under strain. The long-standing agreement to price GCC oil in dollars in exchange for defense and security was already showing signs of instability. Sanctioned oil has already been trading off dollar rails. Saudi Arabia has been localizing defense and experimenting with non-dollar payment rails, alongside other global South central banks. And the majority of West Asia oil is now sold to Asia rather than the United States.
Iran has already been selling large volumes of oil to Chinese refiners through sanctions evading channels, often using yuan-linked payment systems or intermediary financial networks, allowing open yuan settlement, which would formalize what many analysts call the petro-yuan experiment. The shift away from the dollar did not begin with this war. It accelerated after the first presidency of Donald Trump, when sanctions and trade tensions began reshaping global energy flows.
It's not replacing the dollar, not yet. But it is creating something that didn't exist before, an alternative. And in systems like this, alternatives change everything. So now the question isn't whether the Gulf is still rich. It is. The real question is, what happens if the system that created that wealth starts to shift? Because the Gulf economies today don't just depend on oil, they depend on tourism, global investment.
Dubai and Abu Dhabi could be blown up if the UAE gets into the war. These are resort areas. These are tourist destinations. These are not fortified missile defense areas. These are places where rich people are going to party and put their money. And to enter a war zone is to defeat the entire purpose of a place like Dubai.
Which puts the Gulf in a difficult position, because for decades, it didn't just benefit from the system, it depended on it. The Gulf is still one of the richest regions on Earth, but what we're seeing right now is something deeper. Not just conflict, not just economic pressure, but a system being tested. And the real question is, was the system ever truly stable? You tell me that in the comments. If you like this kind of breakdown, consider subscribe because it takes a lot of effort to make these videos. Thank you.